If we use these three underwriting metrics conservatively, we think that we have a good shot, combined with a fast growing market, like I mentioned earlier, and having a good investment for our investors.
Hi, everybody. David and Drew with Nighthawk Equity here. Do you have interest in multifamily, but you don't know how to properly evaluate a deal? Drew, tell us a little bit more about the effective ways to tell if a multifamily investment can be a solid investment.
Yeah, absolutely, David. Thanks so much. So when we look at apartment buildings, we're really looking there's a lot of things, but three big things that we're looking for is growth. And by growth, I mean population growth. Are people moving into that area? Number two, income growth. Are salaries going up in that area so that people can pay for their apartments? And number three, job growth. Are employers moving in there, and are they creating new jobs, driving people to that area? If we get those things, we know that we have a solid lead on finding a good multifamily market to invest in.
Yeah, and those are some great macroeconomic details to look into. Another aspect for passive investors to consider is the underwriting style of the sponsor that they're vetting. What are some key things to look for here to make sure that it's a solid deal with minimal risk?
Yeah, great question here, David. Warren Buffett is famous for saying, beware of nerds with calculators, which is a fancy way of saying, I can make my financial model say anything. So you can't deceive yourself with your financial model. You need to keep your assumptions conservative. And we're always fighting through this in our models. You know, we don't want to just tell ourselves through rose-colored glasses, this is going to be a great deal. We want to stay disciplined. Here are three ways that we do this. Number one, we keep our exit cap rates fairly high. That means that we're not assuming that the world's going to continue to grow at a huge, fast pace. Second, the cost of renovations, especially in this inflationary world, we need to underwrite deals and expect that's going to cost a lot of money to renovate units. And third, the annual rent escalators. If you look in the last 2-3 years, there's been huge rent growth, but we know that historically it's much lower. We don't want to assume that the last 2 years are representative of what the next 5-10 years are going to look like. We want to go in those more conservative historical growth rates. And if we use these three underwriting metrics conservatively, we think that we have a good shot, combined with a fast growing market, like I mentioned earlier, and having a good investment for our investors.
All right, lots of great info there. Thanks so much, Drew. To wrap things up, if you're interested in investing passively with Nighthawk and you have not already scheduled a call with me, feel free to do so. You can schedule a call by visiting nighthawkequity.com/call, and I look forward to speaking with you. Thanks so much for joining. We'll see you next time.